Well, there's a lot of happening things revolving our local companies lately, and the latest news is that Keppel Corp is acquiring SPH non-media businesses. So I would like to give you a very short analysis on what's going on so that you can better decide as a shareholders of either of these two companies. The usual disclaimer, pause and read it if you need to. So we have heard the news that SPH is transferring its media business to a non-profit organization known as a CLG, a company with limited guarantee over here, right? But SPH still have a lot of other businesses, especially in the property business, which is pretty much still valuable, right? Be it whether the assets that's held under SPH REIT or its aged care kind of business. You also have some development property business as well as a joint venture with Keppel Corp on the data center, as well as M1 investment, and also in the student accommodation. So SPH still have a very valuable property portfolio even after the media business has been spun off. And Keppel has also announced that it may be merging its offshore and marine business with sembcorp Marine. Okay, it's not sembcorp, it's sembcorp Marine. And it is a non-binding MOU, which means that it is not confirmed yet. But I think that, since they announced it, there is a very high chance that it will go through. It's probably like testing water and see how the public is responding to this news. And of course, I think it is more positive for Keppel Corp rather than for sembcorp Marine, because the offshore marine business have been suffering for many years, and it doesn't look like it's going to turn around that soon, right? And having sembcorp Marine holding all these offshore marine assets will make more sense rather than having sembcorp Marine as well as Keppel Corp to hold all these assets independently, and proves to be a drag to their share prices. Okay, so I think you can see that the trend of Keppel Corp is that they're moving more into property business and become less reliant on the offshore and marine business. And Keppel Land was also delisted in 2015 by Keppel Corp, and it is also another move to cement more stake into the property business, and also to counter, right, the offshore business that have not been doing well. And you can see from here the announcement, the post-merger will help Keppel increase its net profit as well as ROE and as well as its net asset value. Okay, so they start to see that the property business is the much better one compared to the offshore that they were always been relying on in the last 2 decades per se. Okay, and to sum it up, there were some corporate movements throughout the years between SPH and Keppel Corp, right? And we started off with the Keppel Land delisted in 2015. Okay, that is probably I would say that the starting point where Keppel start to move into more property operations and businesses. Okay, and then May 2021 we saw SPH spinning off its media business to a non-profit entity. That has not been completed yet and is still ongoing as we speak. And in June, there was an announcement of the potential merger of Keppel Offshore and Marine with sembcorp Marine. And now we hear is that Keppel is acquiring SPH non-media business. Okay, and SPH of course is selling its entirety to Keppel Corp after the spin-off of the media business. Okay, so that's how the two businesses actually converge at the end of the day. And SPH fits into Keppel structure perfectly. Okay, because Keppel already have a property arm, and whatever remains of SPH after the spin-off are mainly property businesses too. And Keppel has a asset management, right, has an urban development and a connectivity business segment. So all of what SPH have can fit perfectly. Like the SPH REIT will definitely go under the asset management together with all the other Keppel related REIT like Keppel REIT, Keppel DC REIT, etc. And you also have some senior living kind of property under Watermark, and Orange Valley would fit into that. Okay, and of course there's some other listed entities kind of investment that could also fall under the asset management arm. And SPH also have a development business, right, in the Woodleigh as well as a Seletar Mall held under its development arm that could also merge together with its urban development segment under Keppel Corp. And in connectivity, they already had some working relations together, like the Keppel data centers at Genting Lane. It was 60% owned by Keppel and 40% owned by SPH. So the merger would just make Keppel Corp have 100% stake in the data center, as well as M1. There's a co-ownership between Keppel and SPH. So this is almost a perfect fit into Keppel structure if this merger goes through. Okay, and the post-acquisition Keppel will look like this, right? It still have its energy and environment, but it's moving more to the renewable side, and urban development will add some of the SPH elements in. Connectivity we just mentioned, they will just fully own all the Keppel, the data centers, as well as the M1 stake. Okay, and the asset management is the one that balloons the most, right? And that is the property business part of the house. Okay, and it is a race to bigger AUM, right? Since Keppel wants to move into more property kind of business, right? And it makes sense to do this acquisition. It will increase Keppel's asset under management from 37 billion to 47 billion. That's a 27% increase. Okay, but comparatively, it is still smaller to, say, CapitaLand Investment Management, which is also undergoing restructuring, right? Where they're gonna spin off the CapitaLand Development and take it private, and while the investment management arm of the CapitaLand businesses stay listed. Okay, and altogether you have 115 billion asset under management for CapitaLand Investment Management, which is more than 2 times the size of Keppel at this point in time. And ARA Asset Management, it is at 92 billion US. Okay, so altogether that is definitely cross 100 billion Sing. And these are the 2 bigger players, and you can see that Keppel, even after acquisition, is still smaller than the other 2 players. So there's still room for them to grow, and it seems like that is a trend that Keppel is going to move into for years to come. And what's the deal? And the deal is that there is some distribution to be done in specie. They call it DIS, dividend in specie, to the SPH shareholders. So part of the ownership of SPH REIT, okay, will be given to the existing SPH shareholders. So that will reduce the value of SPH, and then the remaining value after the SPH REIT has been distributed, okay, the value will drop to about 2.2 billion, and that is where Keppel is going to offer to buy over this existing value, right, the remaining value, and in part with cash and in part with Keppel REIT units. Alright, so that is a rough sense how the acquisition is going to be. Okay, they are not going to buy the entire existing SPH non-media businesses in full. There is going to be a distribution in specie first to reduce the value of SPH. Okay, and then after that, the acquisition will happen. Right? And I suspect, why would they want to do that? Why not just buy the entire SPH REIT ownership over? I think it is aligned with what they try to do, like the lighter asset model. I try to use the word asset light. Okay, I'll just say lighter asset because they still own quite a fair bit of all the REITs that's under Keppel. Okay, and to be consistent, it's about 20% maximum. So they wanted to reduce the SPH ownership in SPH REIT first before they do the acquisition. Otherwise, they would have to cough up more money and get a bigger stake than what they would like to, right? So they wanted that dividend in specie to be given to reduce the SPH stake in SPH REIT to about 20%, right? So it's consistent to be the manager of all this property and not a full owner. Okay, and that has advantages because being a property manager, that the fees are pretty lucrative, right? The asset under management is very huge because properties are very capital intensive. Okay, and you take a percentage of the value of all these properties that you manage, as well as all the acquisition and sales, is pretty lucrative. Right? It's better to be a manager than the owner in this case. So that is a strategy that Keppel is trying to pursue, and that explains the dividend in specie. So what does it mean, right? After all these things, what does it mean for the SPH shareholder? What are you going to get? Okay, so there is an illustration from Keppel side. So let's say for every 1,000 SPH shares you have, you're going to receive cash of $668, and Keppel REIT units, 586 units. SPH units, this is the dividend in specie. Okay, this is the dividend in specie, 782 units. And altogether, the value added up is around 2,099. So you can say that you are going to receive $2.09, about $2.10 for every SPH shares that you own. Okay, so the total offer, which is in 3-part: cash, Keppel REIT unit, SPH REIT unit, add up together is worth almost $2.10 for every SPH share. Okay, so is this a fair deal, right? At $2.099. I would say it is fair because on an earlier kind of announcement, SPH did some numbers already. The post restructuring, right, which is after they spin off the media, which is the one that Keppel are not going to buy, which makes sense. It's not their business. They want the properties of SPH, and it's $2.08. Okay, so the NAV, the values is around 208, and the offer is at 2.099. So I do think that this is a very fair offer, right? It's offering you at the value of the underlying properties. Okay, not much premium, just a very slight one, right? And not a significant discount. Okay, because they could offer a discount if they want to, but I think this is a very fair offer to give it at the fair value. Okay, and we still need to go through a series of milestones before this can materialize, because in parallel there are two things that's going to happen. One is the acquisition that we have talked about, and the other one is the media business restructuring, right? And that's not completed yet. Okay, it's not approved and is not effected at this point in time, and both will happen in concurrent periods, and we expect, if everything goes on smoothly, all the deals should be completed by end December 2021. Okay, and another thing important to note is that the acquisition will not go through if the media business restructuring doesn't happen. Okay, so that is a conditional kind of relationship over here, all right? Because Keppel doesn't want the media business. Okay, if the media business doesn't get spun off, then Keppel will not buy SPH. Okay, so they have to be approved in conjunction, right? So in summary, Keppel is offering to buy SPH non-media businesses. Okay, and it is a great match based on what I see over here, because Keppel wants to be a bigger property player and be less dependent on oil and gas as they go through a restructuring and re-strategizing for the future. And I think that they will just go bigger and bigger into properties. Okay, and acquiring SPH makes them leapfrog their EUM by 27%. Okay, and that is significant, and they can build more EUM from there, right? And this is a good opportunity, a winner opportunity they try to catch over here. And for SPH, I also think this is a good deal because you'll get an equivalent of 2.099 versus the value, the post media spin-off value of 2.08 NAV, right? You're actually getting paid at the fair value, right? And you know, a lot of SPH shareholders, depending on what is the share price you bought, okay, have sounded their unhappiness over the years, you know, and why not just take this offer and move on? Okay, that's my view, right? I don't own any Keppel shares, I don't own any SPH shares, but based on my view of this deal, I think it is not a bad one. Okay, and it makes a lot of sense for either Keppel shareholders or SPH shareholders, right? I do think this is a good arrangement. Okay, so I hope I give you a good breakdown of what happened and some of my views, and you can better make a decision for yourself. Okay, so if you like more of these videos, if you can think that, you know, we can value add to your investment decision making, right, please remember to give a thumbs up for this video, as well as subscribe to our channel so you will not miss another update. I'll see you the next time. Cheers.